So thank you so much, Vana, for joining the 2040 Banker. Um, the 2040 Banker is a podcast primarily around bankers, and what we do here is we talk about that how we have evolved in the last couple of decades in the banking industry, and at the same time, we also want to understand that what can we expect by 2040? How would the banking look like, and how should we better prepare for that? And I'm delighted to have you here today. But for the audience, actually, when we first started talking, Vana, so I was going through your LinkedIn profile, and I could see a very diverse experience across technology, banking, across several geographies, actually. So for the audience, I'll just put down some of the keywords and then I'll let you do more justice to your introduction. But so Vana basically brings in about 30 plus years experience in large companies like TCS, Stan Chart Bank, Accenture, and then he led a lot of executive positions at banks like Rak Bank, Equitas Small Finance Bank, Suryodaya Small Finance Bank, and currently he is with Five Star Business Finance. And so I've had the pleasure of talking with him and understand how he sees from his lens how banking has moved and how it continue to move further by 2040. So, Vana, just to get started, why don't you talk a bit about the banking and your career progression? And I'll also want to ask you first, when you were growing up, when you were in education, did you ever think that you would reach this stage in banking specifically? Were you thinking anything to do in banking? And how did all of this actually come up for you?
Yeah, first of all, thanks, Nitin. Absolute pleasure to be here on this podcast. And I know we've had an interesting conversation even prior to this. So obviously, some of it might sound repetitive as well. But yeah, so just to sort of talk about my journey, the way I look at myself is probably more, I describe myself as an explorer. Because over the last 34 years, I have sort of embraced many diverse roles without any prior experience and without being fully prepared in many cases as well. Moved across countries, organizations, functions, and industries, and mostly into the unknown, with probably just the curiosity and the confidence that I would learn along the way and learn quickly. I think that's the way I would describe myself. So I started my career in sales and marketing, actually, in software and then in financial services. After which I spent a significant part of my career in Standard Chartered Bank in the Middle East. I was based in Dubai for many years, where I did a variety of roles, actually. That's when I really learned banking, especially consumer banking, across product management, channel management, operations, and then eventually ended up in technology as a functional expert. So that kind of led me to some additional tech challenges. Because I moved back to India with Standard Chartered itself and was part of a team that built a core banking platform completely from scratch, which was a huge project. And then I was involved in implementing it in about 15 different countries. By the way, today it runs in more than 40 countries across the group, so it still is working. And then Dubai called me back, so I went back to take up a CIO role for a local bank, which was a completely different experience again. And then relocated back to India. And in the last 10 years, I've been involved in technology leadership roles in setting up two small finance banks, setting up technology for two small finance banks, Equitas and Suryodaya, as you mentioned. And I'm currently working with an NBFC doing something similar. So if I have to describe my career, I would say, the best way to describe it is the why not moments. Every time something challenging comes up, the question I ask myself is why not? And that's kind of defined my career and, sort of almost always ready for the next uncharted journey. So to answer the second part of your question, when I was growing up or even when I started my career, I had absolutely no clue where I would end. And I would probably describe my career best as a series of accidents, surprising and positive accidents, which has led me to where I am. Yeah, that's the way I would see it.
Great. And so when you mentioned that it has also been around why not in a lot of careers or a lot of choices that you had, would you like to mention maybe a few incidents where you actually thought about it? Why not just do this? And compared to maybe just going with the flow, how you were progressing with one geography and the kind of other large organizations that you were actually working with, where did the concept of why not actually come there?
So it's a very interesting conversation because I was in Accenture many years ago, based out of India, and I was running a delivery for a large US bank, and I was sort of doing something really big, and tipped to get promoted, and things were going very well. And out of the blue, I had this call from an ex-colleague of mine from Rack Bank. Saying, hey, there's an opening for a CIO. Would you be interested? And my first response was, I said no. I said, I don't think I want to move back now, because I'd just come back to India about 3 years prior to that. So I said no, not interested. And we hung up actually. We sort of ended the conversation there. And then he called me back again a few days later, and he said, listen, I know you're not interested, but the leadership of the bank is in Mumbai, so why don't you just travel there, have a conversation, and and consider the role. You say, talk to them, and and then make a decision. And at that point, obviously, the why not question kicked in, and I said, why not meet them? And then as things turned out, I decided to move back. So completely unexpected, because I had just about finished, I think probably less than a year at Accenture. I probably served about 9 to 10 months, and had absolutely no intention of moving. And it just sort of happened as a sheer accident. And then I went, and the next thing I knew is I was doing a CIO role in a local bank in Dubai. So that's a sort of a classic example of the surprises that life sometimes throws at you.
Agreed. Understood now. And Vana, so when we were speaking earlier, you had mentioned, and I really want to start the podcast on this question now, because you were mentioning that there are several aspects of the banking that have actually not changed in the last couple of decades. So I want to touch base on that first. Why do you think so that a lot of things in banking have not changed? So we can first talk about that, your perspective on that. And second, if a lot has not changed, what actually has changed in your perspective in banking?
Sure. So I'll probably talk about what has changed first, Nitin, and then we'll talk about what has not changed. And I'll probably be talking primarily from a consumer banking lens, because I've spent most of my life in consumer bank in the banking industry. So if I look back at the last 20 years or so, the biggest change that I would say would be the way banking services have been delivered to the end customer. Essentially, we've seen the proliferation of digital channels, mobile telephony, and smartphones, and so on. So the physical side of banking has almost gone away. And then on top of it, if you add UPI in an India context, it's become incredibly easy for customers to carry out financial transactions at various touch points. So the delivery of banking services and products, I think, has changed significantly in the last 20 years. In fact, my own personal experience, I can't even remember when was the last time I visited a bank branch. I don't think I've gone to one in the last 5 to 7 years. I can't even remember. And reality is these days, my wallet doesn't have more than 50 rupees cash at any point in time. In fact, sometimes I don't have any cash at all. So that way banking has changed dramatically in the last 20 years. Customer convenience has gone up exponentially, is my view. So that's what has changed. So when I look at what has not changed, and again, this is my view as a consumer banker, when I look at the suite of products that are being offered today, and I compare it with 20 years back, I'd like to think that not too much has changed. It's still the same savings accounts, loans, cards. It's the same thing. So as a retail customer, the product set that I have access to is probably quite similar, or not radically different from what it used to be, a couple of decades back. It's probably wrapped in a much sleeker app now, but otherwise, I don't think it's changed too much. The other area that I'd like to sort of call out, which I would have hoped for, radical change would be customer service. I mean, with the way technology is today, I would have expected banks to have, a more holistic view of the customer, more personalized service, more proactive service. But I still see banks struggling a little bit with that. So that's really my take. I mean, I think a part of it, like we discussed earlier, is probably attributable to the way banks have, how they view customers and how they've organized themselves, more in a product-centric, organization as compared to being customer-centric. So right now, I feel that, from a product offering and service perspective, it's more reacting to customer needs as opposed to anticipating them. I think that's the way banks are operating today, which is what I'd love to see change, Nitin.
Got it. And you mentioned about that banks. So it looks like two choices when we talk about banks. It's being either product-centric or being customer-centric. And you mentioned that maybe banks are more towards being on the product-centric. But why do you think that is the case? Is there kind of a trade-off that the banks have actually they have to go through, or they just have to make a choice between one against the other?
See, I think one is, of course, the way historically how banks have evolved as well. I think banks, at least in the time when I used to be a part of the consumer bank, many years ago with Standard Chartered, when I was part of the business, was highly product-centric organizations. And I'm not sure banks have evolved radically since then. And there are benefits to it as well. A product-centric organization gives you easy scale, cheaper to mass produce products. You can use a cookie cutter approach and sort of roll it out rapidly. Speed is another advantage.
Right.
Whereas the customer centricity, building that takes more time. There's obviously a cost involved, but it creates more of a loyalty as well from the customer. So I think there are pros and cons to both organizations. But frankly, as a customer, when I look at myself as a banking customer, I couldn't be bothered what the organization of the bank is. I would expect the bank to have a holistic and 360-degree view of my banking needs, whatever the internal organization. But I think at this stage, it's more a function of legacy and perhaps to an extent, the way banks have evolved and are organized, which is really the trade-off. So it's a trade-off between, I'd say, efficiency versus perhaps intimacy. The product-centric organization is definitely more efficient, but you get greater empathy and intimacy in a customer-centric organization. That's the way I would see it, Nitin.
Got it. Understood. But when it comes to, let's say, standardized products, and this is what we have been doing in the last 20, 30 years, that we create standardized products and then we give it to our channels, whether it is branches, sales agents or whatever, and we ask them to sell that product. Of course, I think it brings in efficiency. But at the same time, the other thread is that the customer actually is asking for very specialized offerings now. And that we have seen, especially in the last 5 years, what we have been seeing is customer wants to consume financial services wherever they are. And at the same time, something which is very particularly created for them. And so then what is the way forward for a bank? And you mentioned that it's more to do with efficiency versus maybe customization. But eventually, if the customer is moving towards that direction, then how should the banks actually move forward? And where are banks currently in that overall journey?
So again, my view as a consumer banker would be that banks are just about taking baby steps. I think they have a long way to go in terms of understanding behavior of customer and the life stage of the customer to be able to personalize products. That's my opinion. And I'll give you an example. I mean, even today, and I'm sure you've experienced it as well. Even today, we get calls trying to sell us personal loans and credit cards from well-established banks who are also probably heavily invested in technology. So it's not that they don't have access to the data to understand the customer better. But you still get those calls, where they're trying to sell you a personal loan or a credit card. So I think banks are still trying to push standardized products, like I mentioned earlier, with the cookie cutter approach, even though the technology is available. So I think there's significant investment to be made in terms of understanding the needs of the customer for to prevent these cold calls, and I think also organize themselves in a way which is focused more on meeting the demands of an end customer across the board, a 360-degree view and, sort of managing the requirements of the customer as opposed to just trying to push standardized products. So that will be my view. So it is a trade-off at this point in time in terms of, like I mentioned earlier, and banks are, I think, trying to make those steps, but still quite some distance to go would be my assessment, Nitin.
So, Vana, the problem that I've understood is that banks, they like efficiency, of course, and they have standardized their products. But on the other hand, customers are looking for very personalized offerings. Then is the answer having more layers in between the banks? Because banks stay standardized, customers want personalized. Do we bring in more layers like non-banking financing companies in between, or maybe smaller banks who are focused on highly specific segments of customers and can actually create a wrapper on top of the existing products that we have? So this is one discussion I want to have. And in continuation to that, if you can also share your views on it, since you have actually worked in large banks as well as small finance bank, that's why I want to touch base on this point, that if such segmentation is happening at several layers between banks, small finance banks and all, then how are we seeing the customer priority, business priority, and economics different between a universal bank or let's say an MNC bank compared to a small finance bank which is currently working in India? How do you see this?
So what I'll do is I'll probably take the first part of the question, Nitin, that you raised about, do we need layers in between, or how do we address that issue? I mean, I'm probably oversimplifying it a little bit, but I would think that today, given the amount of data that banks have on customers, it's probably a question of reorganizing themselves and, having the right sort of investing in the right technology to support, a customer-centric view and being able to provide a completely holistic support and service and product offerings to the customer. So I think that's one area where I don't know what's the extent to which investments have been made in that area. I don't believe that banks have solved that yet and made the right investments or made the right moves in in that direction. So that's one thing that I feel quite strongly about. Coming back to the second part of your question about sort of the economics and priorities and customer segments, let's say between a small finance bank and a universal bank, I'll sort of throw a little bit of light given my experience. So the way I see it, a universal bank is almost like a supermarket. It serves everyone from students to retirees, but primarily focus on probably the mass affluent and the HNI segments in many cases. And the focus is on scale because that's where the profits are. A small finance bank is a slightly different model. So on the asset side, they target the unbanked and the underbanked. Primarily the rural, the tier 3 to 5 towns, etc. So your typical, small milk vendor, shopkeepers, they are the target for lending. Okay. But on the other side, on the liability side, they still target mass and mass affluent segments, and in some cases even HNIs with attractive interest rates. So it's what I like to call the Robin Hood model. You borrow from the affluent and lend to the unbanked and the underbanked and make the risk math work. I think they manage the risk very effectively and the margins. So that's one thing that small finance banks do very well. So for instance, just to give you an example, a small finance bank could be sourcing, let's say, an FD from a high net worth customer in Mumbai at 7% and lending to a vegetable vendor in, let's say, Tamil Nadu at 18%, managing the risk and the volumes and the spread. This would be a typical small finance bank model. In terms of diversity of customers, the small finance bank customers are, the customer base is quite diverse. So it could be a rural self-employed borrower to, an urban affluent salaried individual on the liability side. So that's really the difference. And again, from a priorities standpoint that you mentioned, obviously universal banks target is growth in all their chosen segments, geographies, customer base, and so on. So that is a pretty obvious one. But small finance banks have a slightly tricky problem. They also have to prioritize new age technology because you have to cater to your mass affluent depositors and liabilities customers. At the same time, you have to push technology adoption within the unbanked and the underbanked segments to enable low-cost service delivery to that segment. So it's a little bit of a tightrope that they'll have to walk. They find the right balance to be able to cater to both. So that's largely, I would say, the difference between a small finance bank and a universal bank.
Understood. This was very helpful, Vana. And since we are seeing generally the theme that is appearing is customers are very diverse. If we look at several type of customer cohorts, there are a lot of trends that are emerging on the customer side. There are banks which are now servicing different kind of customers, and then there are different sized banks which are now coming as layers in between the customer and the existing large banks. I actually want to understand which is the model that you personally are most bullish on. And just to understand that, what I'll ask you is, let's say if you want to start a new business in the banking world, and you have three options. One is you pick a customer segment of a specific geography or whatever, and then you become that layer one bank for that customer, which is sitting in front of an existing large bank. That's option one. Your other option is you are working with this, or you want to work with a layer zero bank, which is the large bank, and you create new products for a very specialized set of customers. Or the third option is you actually take that layer zero bank and you create a technology to actually improve a very wide base of customers and improve their experience. So which is the model that you believe you would be the most bullish on?
I mean, so given that, we'll steer clear of capital and budgets at this point in time for this discussion, I would I would probably say I'd like to start my own bank, with targeted at a specific segment. That will be my take, and probably I'll give you a little bit of my thoughts around it. So I'd say I would pick a customer segment which would be the current Gen Z population, the 21 to 35 age group, primarily in the mass and the mass affluent space, pan-India, of course. And I'd like to focus on the generation that's starting work now, people who are maybe, in the 21 to 25 kind of, band, because the upside on customer lifetime value is massive. I think, given once you hook them in, then, the upside could be huge. And I remember reading some time back that in India, we're talking about that segment alone, having about 350 million people or thereabouts. So it's a fairly significant number.
Okay.
So that would be the segment that I would focus on, Nitin. And if you want, I have some ideas on products as well, which I could share if you think that might be of value.
No, definitely. So see, what we can actually talk about is, let's say, so you mentioned that your choice would be to actually build a bank, which is targeted to a very specific audience. And the audience that you mentioned that you like specifically is the Gen Z, which is a large base, and then pick a specific geography. Why don't we just convert that into a story? Okay, so right now, let's say if you just have to, in next 5 minutes, if you have to talk about building a bank from scratch. So customer segment you already talked about, but since you were touching base on the products as well, why not just talk about what could be the possible product that you will sell to them, and how would you actually launch the bank?
So I would, from a product standpoint, I would look at primarily savings instruments, which could be a combination of bank accounts, SIPs, investment-linked accounts, insurance-linked savings plans, etc. Essentially, one of the challenges that I see with not just the Gen Z generation here, but also with many other segments is there is a lack of awareness on financial discipline and savings and long-term wealth creation and so on. I think there is generally a certain level of ignorance. And I must say that, even after having worked in a bank for many, many years, even sometimes I am not fully, conversant with what I need to do in terms of managing my investments. Of course, The flip side to it is, I've been told that bankers are the worst people to manage their own money. So that's a different conversation altogether. But I think there is a general lack of awareness, and I see people in this generation not knowing what to do in terms of being able to create long-term wealth for themselves as they start their career, or in their early stages in their career. So I would say focus on products which will enable them to do that, and at the same time I would say also offer it in a way which they can understand, and then that means we're talking about significant gamification, in terms of trying to offer it to them, offering it on digital channels more than anything else, and making it gamified so that they understand how, or educating them on banking, and the banking products, so that they understand how they can manage their money better than what they probably are currently doing. So that is the way I would see it, primarily from a savings point of view. I mean, obviously, the money is in the asset products, so you will need a complement of asset products as well. But I would say focus more on the on the micro loans, salary advances, enable lifestyle related lending in terms of like a home purchase or so on. Those are the kind of things that can be promoted in that segment. Of course, credit cards has become almost mandatory these days. Essentially look at how they can be made more aware of how they can manage their money better. Nitin. That's the way I would see it from a product stand perspective.
Got it. Understood. And you talked about that whatever those customer base basically needs, so you be present in those particular life events for them, which basically means you're talking about getting into the overall life cycle banking of a particular customer. If we talk about that in terms of the capabilities that are typically required for a bank, and you can talk maybe both from the perspective of team, business, mindset, at the same time the technology capabilities that are typically required. What do you think are the typical capabilities a bank need to get into this kind of a banking, which is more targeted towards the life cycle events of a customer, rather than just selling out through the traditional channels that they have been doing so far?
So I would say that what I mean by that is actually more what I call life stage banking, where you understand what stage of life the customer is in and personalize products and services based on that. For example, I'll just give you a simple example. A 25-year-old salaried individual, the segment that we were talking about earlier, will have completely different banking needs compared to, let's say, me, for instance, who's perhaps closer to retirement. Right. And, so my priority will be to sort of protect my savings and, maybe look at annuity plans and, investment plans, which will help me post-retirement and so on. Whereas like a 25-year-old will have completely different needs. Today, I think banks position the same product to both, which is really a challenge. And that's it's a bit surprising as well, because if you look at the amount of data that banks have today, they're sitting on a goldmine of data in terms of demographics, spending patterns, transactional data, family information. I don't think banks leverage the data enough to use it meaningfully, for personalization of products. And I'll give you a simple example. My salary account is with Bank A, which is not my sort of my primary savings account. So I have a primary savings account with Bank B. And every month, as soon as the salary comes in fact, the same day, it gets swept out to my primary savings account from Bank A to Bank B. And so far, I have not received a single call from, let's say, Bank A to understand, saying, why are you moving the money? What can we do to retain it? It just doesn't happen. So I'm saying that those are the kind of opportunities that I feel banks are missing out on. And I'm talking more as a customer, as compared to a banker. I'm saying it just doesn't happen. So what banks will have to look at is to create, what I call life stage banking experience, for customers. Yeah. And I would see two critical factors that banks have to look at, Nitin. One is, leverage your data to the maximum and, sort of leverage emerging technologies like AI and so on, AI, ML, to create more personalized offers. I think that is a huge opportunity. And again, I was talking to somebody in our peer group the other day, and, we were talking about a use case, for instance. Again, you look at, let's say you got school fees going every month as a debit from your account. Imagine a bank looking at it and then, let's say, giving you a long-term savings plan for college admissions, for instance. I'm saying these are simple use cases, but the opportunity is massive. So I'd say the most important thing is to leverage the available data and use AI and ML to create personalized offers. But the second point, I think, which is even more important in my opinion, is to see customers as individuals, not as consumers of a product. So I think today many banks look at them as a consumer of a product as opposed to an individual who has their own banking requirements. I think that is something that banks will have to look at, and that, in my opinion, would also require a little bit of a cultural shift in banks. So that's the way I see it, Nitin.
Understood. And one of the example that you took, Bank A and Bank B, was that a hypothetical example, or is that a real?
No, it is a real experience in my case, and obviously I'm not going to name Bank A and Bank B, but it has happened to me, Nitin, absolutely.
Okay, understood. And so you talked about that there would be a cultural shift that actually be required to actually reach there. So while there is a lot of opportunity, but so far we have not reached to that particular stage where we can actually cultivate those things. But in terms of cultural shift, what do you think? I mean, what exactly, can you elaborate a bit on that? What kind of cultural shift is required?
I think, the DNA has to be more customer-centric than what it is today. Ultimately recognizing the customer as an individual and seeing what will be fit for purpose from a product and service standpoint and offering that. And it's not, I can't imagine that it will be difficult to do that with the available technology today. If you look at the art of the possible, there's plenty that technology can do today. So I think it just requires a mindset change to see customers as customers and organize yourself as a bank to be able to cater to that requirement. See, a lot of times with the larger banks, and I've been in a couple of large banks myself, you tend to get very siloed, in your own function, with the result that you probably don't look at, the breadth of the customer, for instance.
Correct.
So I think those are the kind of cultural shifts that banks need to make in terms of viewing customers as customers. I think that's a significant thing that I would see that banks have to do.
Understood. So, and when we say that, let's say, as a bank, so far we have not used the data that is available with us, and due to which we don't understand our customers really well. But let's take a scenario where, let's say there is a bank which is actually able to do this, and they are understanding their customer really well as well. But when it comes to which is that particular customer segment which would give them a higher lifetime value over a longer period. So then that's when typically banks start categorizing their customers into layers. And what we also seen is a lot of times the bottom of the pyramid layer is always left out. So they'll always target, let's say, on tier 1 cities, and within tier 1, only the top segment, they'll keep selling to the same base, the same set of credit cards again and again, rather than going for the bottom of the pyramid where there could be an opportunity. But because of the bandwidth that they have today, they don't want to look at that base because they cannot service that large amount of base today. But do you think there is some shift that technology can actually bring in to address these set of customers which are at the bottom of the pyramid with the bank?
Oh, absolutely. So the way I see it, Nitin, see, today what technology has been able to do is it has been able to significantly drive down the cost of delivering service to customers.
Okay.
I think that is something that we've seen today with all the digitalization that's happening.
Yeah.
So frankly, delivering efficient service to, let's say, the bottom of the pyramid, which is primarily what I call the unbanked and the underbanked, is not so difficult. And there is if I may just elaborate on that a little bit, there is a misconception that this segment is not digitally savvy, and hence they do not adopt to technology that banks are offering and so on. So they do expect digital penetration to be quite low in this segment. But I'm not sure I'd agree with that assessment. And again, I'll relate it to a personal experience of mine. So I was traveling down south by road, into what I call slightly deep interior Tamil Nadu. And we wanted to buy some fruit, so, and as I mentioned earlier, I don't carry enough cash in my wallet ever. So, we wanted to buy fruit, and that guy had a UPI QR code through which I could make a payment, and this you're talking about, rural Tamil Nadu where it's still prevalent. So what I'm saying is they do adopt to technology. And this is the same segment that uses, let's say, WhatsApp, Instagram, Facebook. They do their phone recharges through Paytm. So I don't quite subscribe to the fact that this segment is not tech savvy. Sort of my take on that is if a farmer in a rural area is doing Instagram reels, but is unable to carry out banking transactions, then that's not a user issue. That's a bank problem.
Right.
So I keep hearing this quite a lot, or I used to hear it in some of my previous organizations where people say, this segment is not digitally savvy. They need more user training and engagement on the platform and so on. And my favorite response is, I say these are the same customers who use Facebook and Instagram. And I don't think Meta has done any user training workshops for them to be familiar with it. So it's a question of the way technology is positioned to them. And I see three things which are vital if you want to position technology to this segment, Nathan. One is it has to be intuitive. Second, it has to be very simple. And the third is it has to be in the local language. So I think as long as these criteria are kept in mind, I think adoption could explode. So to come back to the starting point, it is still possible to position technologically, should I say, relevant offers and products and services to this segment through digital channels. If it's built right, and if the user experience is built right, that's the way I would see it.
Got it. And you also believe that it could still make economic sense for a bank to service a large, varied set of customers without maybe taking losses on the investments that they'll do to cater to that particular audience.
Oh, absolutely. Because there are 2 points that strike me, in response to what you mentioned. One is if you look at the small finance bank model, their entire asset customers are in this segment. Okay, and they're profitable, very profitable, and even if you factor, the credit losses that might occur and all that, despite all that, they're quite profitable. So that is one, one angle to it. The other is this is also the segment where the scalability upside is huge. I mean, you could really scale up massively. So as long as you make the right investments in technology, which will give you the cost benefit and the scalability, there's no reason why you can't cater to this segment.
Understood. So Vana, seems like that the theme of our podcast today is coming out to be more verticalized or customer specific financial services. Now it could be, let's say, a layer 0 bank implementing it, or a layer 1 bank defining that particular customer segment. And I want to hear a bit that as a layer 1 or layer 0 bank, if somebody is a CTO of such banks, how would my architecture actually look like? Because if for layer 1 bank, it might still be simpler because you are specifically catering to a single kind of a customer segment. And I know this is the audience that I want to optimize my technology infrastructure for. But when it comes to, let's say, a layer 0 bank, which is integrating with or which is actually distributing their services to a large set of customer segments, how do they manage, or what is the right way for them to manage this kind of a customer segmentation?
So when you say layer 0, could you just expand on that, Nitin?
I'm saying, let's say the layer 0 is a very large bank, which has standardized products built for them, has done really good at a mass level selling out their products. So in simple terms, let's say they are just selling consumer personal loan, plain vanilla consumer loans. On the other hand, a layer 1 bank is something which maybe works very closely with the layer 0 bank, but caters to a very specific target audience. Like you mentioned, you would want to build a bank for Gen Z. So let's say there is a layer 1 bank which is only catering to that Gen Z audience. But layer 0 and layer 1 are also collaborating with each other in terms of at the end to reach out to that Gen Z audience. So that is the kind of ecosystem I'm talking about. So in this kind of a system, how would a layer 1 bank CTO architect their technology stack, and how would a layer 0 CTO would actually architect their technology stack?
So I think I'll talk about the layer 1 bank first. Given the fact that the layer 1 bank caters to a specific segment and is very, very targeted, and in this case, let's assume for a minute that they cater to the Gen Z, and so it's very digitally savvy and so on. What will be required for a CTO from a tech arc perspective is broadly 2-3 principles that I think you need to adhere to. One is it has to be open in terms of the ability to integrate with platforms, let's say with the layer 0 bank platforms and so on and so forth. So very highly API driven is something that I would see as one of the principles. The second would be in terms of massive focus on UX and UI and CX, basically, in terms of making sure that the digital channels provide a very simple, intuitive, and very smooth user experience for the segment that you're catering to. I think that will be very important. And one of the challenges I've seen, again, this is my own experience, on digital channels, is that typically when you design these kind of digital experiences for customers, they are also what I call high velocity change platforms. The amount of change that goes through these platforms is massive. So what you will need is almost like I'd say a low code, no code platform, which can cater to this requirement and handle change easily, and have the usual DevOps structure in place and all that to manage rapid application development and deployment. So that would be what I would see from a layer 1 bank. A layer 0 bank is probably a little bit easier. I mean, given that it's a large bank, fair to assume that budgetary constraints don't exist. So I think you will have to invest in the whole 9 yards in terms of a very strong transaction processing layer in terms of your core platforms, your loan management platforms, and so on. But again, a very evolved API layer or an API gateway which can integrate with your layer 1 banks and multiple fintech partners, which will help you. So you have to, it's a combination of having the rigor of a large bank, but at the same time having the nimbleness and and adaptability that you need to build in, which is not easy in a large bank, I can tell you that. But that is something that will be required, to be able to integrate with layer 1 banks and fintechs and so on. Yeah.
Understood. So what I understood is the layer 1 bank, you're saying it's more about customer experience and the agility to quickly change around a particular customer segment. And the layer 0 bank is more around giving a great API or a great developer experience so that the layer 1 banks can actually quickly integrate into the layer 0 banks. So this is how, which I would also call as more around embedded banking, which a lot of banks are actually taking that particular route. But when it comes to embedded, lately there have been a lot of good success stories, but there have been some failures also that we have seen in the embedded banking. In your view, how do you see this market, embedded banking, and what do you think is the right set of bank who should actually adopt this kind of a banking for them?
See, I think banks will require a slightly different mindset to be able to embrace the embedded finance or embedded banking model. And the reason why I say that is because you're quite heavily reliant on fintechs to be able to take this forward. I think it's a very different model. And I think banks will have to get out of their legacy mindset. You cannot treat embedded finance as another distribution channel. It's a completely new business model. So it'll require a change in mindset in the bank. And I've seen banks, which, let's say, for instance, force fintech partners to follow their process and workflows, which could be quite archaic as well. So that so you'll need a certain level of nimbleness and adaptability to be able to make embedded finance a success. So that's one key element I see. The other is also the tech stack. See, today one of the biggest challenges that I've seen in the large banks that I've been a part of is the legacy. You have so much of technology legacy, tech debt, that it's not easy to just go and integrate, into a fintech. It's never that simple. And it requires a significant tech effort. In fact, I remember reading, maybe more than a year back, I was reading an article which said that the average time that it takes for a bank to carry out a fintech integration, I believe, is 14 months.
Oh, yeah.
So I'm saying,
that's true. Yeah.
At 14 months, you can't, you just can't run embedded finance in that manner.
That's true, actually.
So these are some of the challenges that banks have to overcome to make embedded finance a success. And of course, the other important aspect is to manage partnership challenges. See, banks, and I'm having been a typical banker myself, I always love to have control over what I'm doing. So banks want to keep control over their fintech partners and so on, and are culturally not usually in the same wavelength.
Correct.
So that also requires a mindset shift for banks to sort of take to embedded finance. And the last challenge that I see, which again, I'm not sure I really have a solution, but typically, banks, for the right reasons, think compliance first. And they have to. Obviously, it's the lifeblood of the bank. But that actually brings in certain bottlenecks for partnerships, and create cultural differences, which can actually scuttle a lot of the fintech initiatives. So that's something that I guess, banks will have to find the right balance, to make sure you're compliant, but at the same time, being agile enough to adopt the fintech integrations. Yeah.
Yeah. No, I can very well relate to this one. So a couple of years back, when we actually started Refo, I was on the fintech side. So I was trying to integrate with banks. It took us easily about a year, bare minimum, to actually integrate with one of the bank. And if it is very aggressive, then...
Are you below the 14-month average or not?
We were, yeah. So luckily, somehow we were below that. But I've seen projects going on for at least 1.5 years easily to establish that integration. And that was the reason we actually wanted to change that. And we thought, okay, let's build something for that and go towards the bank side and build a stack so that banks can do it faster. And that's the journey that we are on.
No, I'll share an interesting point here, Nitin. Sorry, I didn't mean to cut you here.
No.
But I mean, I don't want to. This is not a bashing session of the large banks, but one of the larger banks that I worked in, the lead time from a sign-off from the user to the deployment of a change was probably 6 to 7 weeks. I mean, after the change is delivered, tested, to deploy it takes 7 weeks. So I'm saying, in that kind of an environment, if you're trying to build an integration with a fintech in, let's say, 6 to 8 week kind of project, obviously it requires a massive overhaul of, the way you operate.
Correct. That's true. That's a reality as of today. I think if something changes in the next 5 years, we'll see, I think, how that change comes in. So what I'm noticing, again, going on the podcast theme, today we largely talked about how the customer segmentation is happening, how the financial services are getting delivered. It has to be more customized experience for, let's say, smaller banks. For the larger banks, it has to be more embedded, API readiness. But what about branches? What do you think? How would a branch actually look like in 2040?
Okay. It's a tricky one to gaze into a crystal ball and predict, because there's still so much that can change between now and 2040. But at least based on, if I were to visualize technology as it's available today and extrapolate that onto 2040, then broadly I would say I still think that the branch will exist to start with, because I think there have been in the past existential questions about branches. And honestly, I remember the first time back in, must have been 2002 or 3, when I launched internet banking for the bank that I used to work with. People were saying that in the next 10 years, branches will go away. That was the prediction. Obviously, it's not happened, and branches continue to exist. So my assessment or view is that in 2040, branches will exist in a different shape and form. So rather than a delivery channel, I think it will be more seen as what I call a trust center, to sort of shore up the trust of a brand, So it will be more a branding / building trust kind of channel for banks, So that's And I'll admit it, having spent many years in technology myself, I would still be hesitant today to, let's say, have my banking with a completely digital bank. I would still have a little bit of reservation to do that.
Correct.
So I think branches will exist more as trust centers. Is the way I see it in the future. So what will the branch look like? I'm visualizing it to be completely digital, with probably a lot of, let's say, augmented reality, virtual reality kind of setup to enable personalized, product and service delivery to the customer. I'd like to think teller counters will probably disappear. I think it will become a little bit like the typewriters of today. We don't see them anywhere. So I think the same thing will happen to teller counters is my reading. And a lot of the customer authentication, for instance, will be through biometrics, maybe what do you call it, palm vein scanning, facial recognition, voice, all of those aspects in terms of the way customers authenticated. And I think the style, I'm hoping, will be more like a lounge/coffee shop kind of style setup, where it makes it a more enjoyable experience to visit a bank branch as opposed to today where it's a chore. I dread going into a bank branch today. So that's the way I'm visualizing a 2040 branch, Nitin.
Very well. So understood. So you're saying that it should be more, so it would be more towards efficient branches, more like the trust centers for the bank, and a more enjoyable experience rather than just going there and standing in queues.
Yeah, and
so that's what you wish for.
Absolutely. And the one other thing I might just add, keeping the environment in view, is I'd probably expect branches to be net zero by the time, where they run completely on renewable energy, and so that's sort of the social angle to it, where they're totally paperless, powered by renewable energy. That's something I'd love to see in a 2040 branch.
Makes sense. And Vana, since we were talking about large banks, there is one correlation and one study that we had done in the past, and I'd shared the infographic with you just before the podcast. And for our audience, we'll just put it on the screen so that they can refer to it. So I'll share what we observed. So we did some crunching on the numbers, how small banks and large banks vary in terms of efficiencies. But so far, we have not gone down in terms of the why aspect of it. And this is something I would want to understand from you. What do you think there are variations? I'll just refer to my notes, that infographic here. So from our observation, what we could see was as the bank asset under management increases, so as the banks become larger in size, larger banks were more efficient than the smaller banks, which means they were generating more profit per employee. And the second observation that we saw, that as the banks were becoming larger, their operational efficiency, so let's say if there are 10 banks in a country, we primarily did it for India, but for India, as the banks were becoming larger, their operational efficiencies were converging. So there was not a lot of difference that we could actually see between the banks. So in terms of efficiency, their differentiation was actually diminishing in that sense. And lastly, the third interesting inference we could see was public banks compared to private banks, even if they were small or mid-size, from day one, even when they were smaller, they were much more efficient than the private banks. But when eventually all became big, then they were at par with the private banks. So this is one trend that we saw, and we started seeing that as you become more larger, you are kind of getting commoditized in terms of the efficiencies that you can actually generate, less differentiation, very standardized. And this is what I think, this is probably what a layer zero bank that we have been talking about looks like. Yeah, but what do you think what is a why element in this? So that's the reason we wanted to ask an expert like you that what could possibly explain this infographic?
Okay. So, I wouldn't profess to be an expert on this, Nitin, but definitely I'll sort of give my 2 cents of wisdom. See, the efficiency ratio becoming better with larger asset-sized banks, I think that is something that I'm not surprised with, to be honest with you. And the reason why I say that is because think for most banks, there's a significant investment that is required in technology and operations, not just from a customer service point of view, but also from a compliance and regulatory standpoint as well. So it is quite a significant investment. And as the AUM scales up, or the size of the bank scales up, the customer base grows, and the bank starts to realize the value of these investments, because you're not making what I call incremental investments in the same proportion. But the initial investment is definitely significant. So which is why in the highest segment or the highest tier of assets, you find that the efficiency is definitely higher. I think that is something that I'm able to relate to, and I'm not surprised to see that graphic. And that is probably the reason why I also see a convergence between the efficiency ratios of public and private sector banks. I think they realize the value, both realize the value of their investments, and and hence they're able to become more efficient as they scale up. But one thing that I must admit, I'm not in a position to sort of explain and not able to understand this difference in efficiency ratios between public and private sector banks at the lower end, where the public sector banks are more efficient, is not something that I'm able to, frankly, I'm not able to find an explanation for it at this point in time, Nitin. Maybe it might require a little bit more data, and probably might require a separate podcast.
All right. No, great. Good to hear your perspective, Vana, on this. And so, since we're talking about large banks, small banks, I also want to understand a bit. I want you to wear your CTO hat right now, and let's talk about a scenario where, let's say, you are in a boardroom in the year 2035, and you're having a discussion with your board along with your CEO. What do you think is the biggest risk that you would be debating at that point in time? And what are some of the risks that we are not debating today that would be more pertinent at that point in time for us?
Again, it's a little bit like gazing into a crystal ball. So because between now and 2035, the landscape could change so much that the risks could be completely different. But again, looking at the way technology is evolving and the way I see some of these risks panning out, I think it's safe to assume that AI would be very deeply embedded into technology within banks by then. I think that's a fair assumption to make. And a lot of the authentication of customers would be through digital means, biometrics, and so on and so forth. So I think compromise of digital identities of the customer is probably something that I see as a big challenge, Nitin. I think that's a risk that CTOs and CEOs have to be prepared for, and sort of managing that piece of information security in the new world, I'd say would be a big concern. And I mean, just to give you an example, so can you imagine, let's say, a deepfake which impersonates the customer's identity, or let's say a quantum computing setup which can crack today's encryption in minutes. And these are some of the risks that we have for the next generation banking. So, I mean, I'm just visualizing, let's say, a deepfake which clones a customer's voice to authorize, let's say, $1 million transaction, while a quantum computer probably cracks the encryption in real time. I mean, these are actual risks that CEOs and CTOs have to prepare for, I think, by 2035. And the reality is many banks are probably still patching yesterday's vulnerabilities right now. So I'm saying it will require a completely different mindset shift, and the challenges would be very, very different as I see it. So, and the biggest risk that a CEO, so if I was a CEO of a bank in 2035, the biggest risk I'd be concerned about is loss of trust. When something like this happens, I mean, how do you future-proof trust? So that's something that I'd be quite concerned about. In fact, I dare say, if I were to extrapolate this a little bit, in 2035, I think a run on a bank probably won't be on deposits; it'll be on trust. Because that's what you lose if you have all these AI-based frauds that happen. So so I think banks will need to look at AI native fraud detection, identity fakes. So those are kind of the things that I think banks will have to gear up for by 2035. That's the way I see it, Nitin.
Understood. So Vana, now I want to shift a bit on the personal side and also more on the human element of a banker. And I want to start by asking you, maybe if you can share from your such a diverse and rich experience, if you could share one example where you were very proud of one of the achievement that you could actually accomplish, and one, if you can also mention maybe one example where you did not get the results as they were expected, and how all of that turned out to be in future, and in hindsight, how do you see that?
Yeah, I could do that, Nitin. I can think of a story for each of these cases, which is, it's a bit old, but it did give me significant learnings as well. So,
sure.
So one of the sort of the high moments or successes, if you can call it that, was a project that I was running where I was implementing a core banking platform in one of my previous banks in a country in Asia.
Okay.
So at that time, I was doing a lot of project implementation kind of roles, and I had direct accountability for delivery of this project. So it was my neck on the block for the project, and this was like a kind of like a test case that the group was doing, to see if they could take it into other countries. So in a way, the success of the rest of the program depended on the success of this implementation. So so there was massive pressure, And it was quite a complex program of work because the implementation was happening in a country in Southeast Asia. We were running development out of Chennai, and the infrastructure was being housed in Hong Kong, and some of the support was coming out from Malaysia. So it was a truly multi-country setup, multi-country touch point. So there were cultural sensitivities to deal with as well. And when I started the project, it actually looked quite daunting. And I had massive doubts about whether I will be able to execute a project of this scale and magnitude. And it wasn't made any better by the many layers above me. There were a lot of naysayers above me who sort of convinced me that I won't be able to execute it. They constantly kept saying, no, it can't happen, you can't deliver it, and so on. And then I got it delivered within time and within budget. So that was one of the most satisfying moments. To defy the odds and sort of prove that you're capable of delivering it. If I look at the learnings from there, so the biggest learning I had was about myself. And what I took away from there was sometimes we underestimate our own resilience and toughness. So the learning was to have confidence and faith in your own ability. I think that is something that I learned about myself. So it was more a self-discovery kind of aspect. And at the same time, I realized that self-doubt and fear of failure, they're usually seen as weaknesses and sort of negative elements. But I also think it can be exploited to achieve success. When you start confronting your fears and doubts, you start moving forward. So, and I had to confront my fears and my self-doubts, and people constantly sort of nagging me to say that I can't deliver. I had to confront it and sort of overcome that. So sometimes you have to face it head on to be able to make it a success. So that was one learning from the project. There's another key lesson that I took away, and I've applied it to a lot of the projects that I've run subsequently. When you start large transformation programs, it looks daunting, it looks really scary at times. So the trick I realized is to break it down into small steps and sometimes focus only on the next step. So I sort of equate it to mountaineering. Your focus is on the end goal is the summit, but you sort of focus only on the next step and then the next step and so on. You take baby steps. So while it's important to have this big picture and sort of have that in mind, sometimes it's very useful to just have very narrow-minded focus only on the next step and then get it executed one step at a time. Correct. So that's a major learning that I had. And even today, when I take on large transformation projects that I oversee, I usually, there are a lot of times when I tell my team, please tell me what are the key deliverables, let's say over the next 2 months. The project could be 18 months long, but I say let's focus on the next 2 months and get that right. Because if you get that right in 2-month chunks, then chances are you will get your program right.
Right.
So these are some of the learnings from what I call sort of a success, so to speak. I'll also talk about one of the low points or one of the what I call a failure as well. And again, this was in one of my previous banks where we were implementing a loan origination and management platform. The project started off well, and it sort of seemed to be on the right trajectory. But over time, we found that momentum was reducing, and we kept getting caught up in scope creeps and changes in requirements, and the project just kept getting delayed. And in my reviews, I was always told that these are issues which are getting resolved. We'll implement soon. It'll happen, over the next few months and so on. And I also sort of took my eye off the ball, due to certain other priorities. And I think I was also a little bit hesitant to sort of look at the issues. So, excuse me. So, eventually the project had to be scrapped because there was no end to the changes in scope and requirements. And it was nowhere near going live. So we had to scrap the project. And the key takeaway for me from that was, to be able to confront bad news and tackle issues head on. Because my learning from that, and with the benefit of hindsight, when I look at it today, I find that maybe I was the ostrich in the sand. I sort of put my head in the sand and said, I hope that the issues will go away. But it doesn't. So my learning is, to have those unpleasant conversations, have the bad news upfront, tackle the issues head on. So I think that's a key learning that I would take away, and be prepared for unpleasant news, and find ways to deal with it. So that's one of the key learnings that I have. So when I look at both these experiences, it actually boils down to confronting hard truths. So one is where you face your self-doubt and overcome it. And the other is where, I ran away from reality and, sort of paid the price for it. So these are probably the two key incidents where I took away significant learning. Yeah.
Thank you so much, Vana, for sharing these. Because at times people think that maybe leaders are immune to something like self-doubt. But that's not always the case. Whenever you take something very large, if it looks like something which is impossible to do, there is always self-doubt that is there. But that is what keeps people running. But as you're sharing this, I think a lot of people would actually understand this, that it's not something that anybody's immune to it. You have to just go ahead with it and find your strengths around that itself.
Yeah, I think
that way it was very, very helpful.
Absolutely. I think what I've realized is you have to face your doubts to overcome them. They won't go away on their own. So that was one of my key learnings.
Correct. Absolutely. And so on the similar lines, Vana, so there are some cases where we have also seen that a lot of bankers, since this is one of the most important industry, because there is money movement involved, people's life are related to this particular industry. I've always seen that a lot of bankers are overworked. There is always lack of bandwidth with people. And then you mentioned that if there is any kind of large project that is going on, people at times they burn out. So what is your suggestion to bankers who believe that they're burning out, and they're feeling, I think, very stressed out with their work right now? Any suggestions for them?
I'm certainly not a guru to preach on this, but I can share some of my experiences, Nitin, in terms of what I have learned from my years at work. Because I think the burnout not only applies to bankers, it's across all professionals, but banking, I think, is slightly more high stress because there's regulatory pressure, customer demands, financial risk is big. And I've experienced the stress myself. When you run technology for a bank, in my opinion, it's one of the most high stress jobs that you can be in, because a system outage, for instance, could mean massive financial loss. It's not just that customers can't access their money. It could actually mean a financial loss because there's a settlement risk. And if there's a security breach, it could mean reputational risk. Stock price could come down. I mean, there are various things that, that could happen on systems which are related to banking. So, and I've sort of been through it myself many times in my career. But like I said, I don't think I'm qualified to advise people, but I'll probably give my perspective and my experience, which perhaps could benefit people. To me, the starting point is, for what has worked for me is, I've recognized that work is only one part of your life. There is more to life than just work. And
Right.
my favorite quote there, and I don't remember who said it, but it is, no one on their deathbed ever thought that they had wished that they had spent more time in office. I don't think that.
Yeah.
So you have to recognize that work is just a part of your life. There's more to life beyond work. Find the right work-life balance, and
True.
focus on sort of the physical and mental well-being. And sort of the physical well-being, I'd break it down to 4 simple pillars. It's your diet, exercise, sleep, and hydration. If you can take care of all these 4 things, then at least I'm mindful of all of these 4 elements. So I find that it works for me. And there is the huge mental health aspect to it as well. And again, I don't want to profess to be a guru, but live in the here and the now is something that has worked for me. Don't worry too much about the past or the future. And I'm personally a big fan of this German philosopher called Eckhart Tolle. He's written this book called The Power of Now. It's a very famous book, and which advocates living in the present and being present at all times. Which helps you manage difficult situations quite well as well. I mean, for me, it's been life-changing. In terms of the way I deal with stress, work, pressure, toxicity, uncertainty, all of these things. It helps me quite significantly in terms of the way I manage it. So I'm a big fan of that. I also have a lot of other interests outside of work. I'm very passionate about sport, watch a lot of sport. I'm a big Formula One fan. So,
Nice.
When there's an F1 race going on, there's nothing else that happens for me in my life.
Wow.
And I watch a lot of other sport as well. And I read quite a lot. So that kind of helps me evolve as a person. So that is something that has helped me quite a bit. And of course, the family ecosystem and bond that we have is quite strong. So that helps you navigate difficult times and manage stress, Nitin. So these are things that have helped me significantly. And if I may add to it, one other thing that I find works to my strength is, I don't take myself too seriously at work. I have the ability to laugh at myself, look at the lighter side of things, because in my view, we spend a very significant part of our life at office. So you should have fun when you're at work. So I'm always very conscious of keeping things light, looking at the funny side of things, and and I don't take myself too seriously at all. So that's definitely quite helpful. And you make time for the things that matter beyond work. So I in fact get quite amused when people say, I'm so busy at work that I don't have time to attend to my personal things, and I'm sort of smiling to myself and saying, it's just a question of priorities. So not a guru, but these are some of the things that have helped me, Nathan.
No, I understand, Vanaso, but I think whatever you just shared, I believe it would certainly help people, because at times when we are under stress or we are feeling burned out, you need to be reminded of all of these things again and again. And hearing this from the leaders, how leaders are managing it, this is something which rest of the team also needs to learn right from the start. And I can actually tell you from my own experience that the level of stress, and you rightly said, having a CTO hat for a bank or for financial services, it's very difficult. Even my previous roles, when I was playing the role of a CTO for a fintech where we were doing billions of dollars of movement on a daily basis, what kept me awake at night was about the platform security and stability. That how do we make it more secure? How do we make it more redundant and all? And that stress is real, and that stress is multifold compared to any other kind of a vertical if you are working in, compared to financial services. But hearing your thoughts, actually, this is something which I hope most of the listeners can actually relate to it and try to adopt some of these things. That it happens with everyone, but there's a set framework. There are a few frameworks that somebody can follow, and just try to feel relaxed around that. So one more thing I actually want to understand again on the personal side of it. Since you have been the CTO of several prominent banks now, if somebody wants to become a CTO and they're, let's say, just getting started with their career, or it's been 4 or 5 years, they got into the career, what is the path to actually becoming a CTO for a bank?
Well, to start with, probably don't do any of the things that I did because mine was just a series of accidents. But I mean, jokes apart, I don't know if there's a set template to it, Nitin, but I would say I would urge someone to sort of cultivate 2-3 key sort of traits that are important, or depth in some of these areas. One is, of course, understanding the banking business very well, because today I don't think you can sort of separate technology from banking. So it's very important for CTOs to understand, the banking business. I think gone are the days where technology was seen as a business enabler. Today it's actually a business driver, and it's sort of the bedrock on which innovation, product and service delivery is happening in banking. So cultivate banking business depth is something that I would strongly urge CTOs to look at, or prospective CTOs to look at. Have a solid understanding of emerging technologies, because I think the CTO would probably be in the best position to understand how emerging technologies can be leveraged to create business opportunities within a bank. So I think that's the second aspect. And the third, which in my opinion is very important, is what I call transformational leadership. What is the leadership that you can provide for transformation programs? Because I think technology, increasingly, there's a lot of work around transformation that happens. So transformation leadership is very different from, let's say, what I call leadership required in a BAU scenario where you keep the lights on. So I think that is something which I see as very important from a CTO perspective. So I'd say, cultivate these 3 traits, fundamentally keep your eyes and ears open, soak up all that you can like a sponge, sort of equip yourself, with the knowledge. And if you're smart in applying it, and cultivate these leadership skills, then, I guess the world is your oyster. But the way I'm seeing the CTO's role evolving, it's probably moving increasingly from keeping the lights on to probably reinventing the light bulb. That's how the role is changing. So some of these skills will probably help people gear themselves up for a CTO role.
Understood. And Vana, can you just double click on the transformational leadership that you mentioned? What does that actually mean?
See, I think it's about having to provide leadership on how you manage technology transformation, because a technology transformation program has a huge impact organization-wide. And in this day and age where technology permeates right across all aspects of banking, the CTO's ability to provide leadership across various functions, not just within technology, but also to work with the businesses and all the other functions, to embed this transformation across the bank requires significant leadership, which means you need to be able to understand what is the impact that the transformation will have across these various areas, position it right across the various businesses and functions, and support the respective leaders in making sure that the transformation gets embedded. So that is what I mean by transformational leadership, Nitin. So essentially, it's all about how do you make sure that whatever technology transformation you're driving truly gets embedded across the organization and delivers value that it's supposed to the bank. So that's the way I see it.
Understood. Got it. And so this is about, let's say, if somebody wants to become a CTO, but there is also a trend where a lot of bankers these days are being sought by a lot of fintechs. Right, so fintechs require skills around banking, around money movement. At the same time, they want to understand how banks think, so they are hiring a lot of bankers. So let's consider a scenario where there is somebody who is, let's say, somebody who is 45 years of age, currently working in a large bank, and they have an opportunity to move to a fintech. And this kind of thing is happening more, I think, frequently these days. What is your perception on this? What do you think? Who are the kind of people who should actually do this, moving from a bank to a fintech, and who are the people who should just stay away from such an opportunity?
Well, I mean, to start with, I've always been an advocate of challenging yourself in new environments because that's how my career has evolved. So my first response will always be say yes to a move if it's going to challenge you.
Okay.
It's not so much about age, it's more about attitude. And I don't think it can be generic advice, not a one size fits all, but I mean, it obviously depends on the individual. But I think there are a few things that you have to prepare yourself for if you're moving from a bank to a fintech. I think the first thing that you have to get used to would be the pace of the fintech. It could be quite different from a bank. Obviously a fintech will be more fast paced. You need to adapt to the pace of work. That is something that I see, which you need to get used to. But the flip side to it is you can also see the impact of the work that you're doing almost immediately as compared to a bank. Where in a bank it could take months, sometimes even years for you to see the impact of a large transformational program. Whereas in a fintech, you could probably see it in even weeks. You could see the impact of the work that you're doing, translate even within weeks. There are a few other things that I would say which require a mindset change if you're moving to a fintech. And one would be you have to get used to working with people who are get used to working with and for people who are significantly younger than you. Because a lot of the fintech leadership is young, Gen Z, Gen X, Y, whatever. They'll all be younger than, let's say, the 45-year-old banker who wants to move. So I think a key element will be, the ability to leave your ego behind when you join the fintech. I think that's something which is a very important trait. Another difference that I see is also, things will be fluid in a fintech. It'll evolve. There'll be a certain level of uncertainty. So those who are comfortable, and I've seen many bankers who are very comfortable with established processes, structures, hierarchy, set of routines, I don't think they will be the right candidate for a move. You should be able to step outside your comfort zone and deal with the uncertainty. So I would say, if you're sort of happy to step outside your comfort zone, move, else stay. That will be my take. In fact, it's funny you asked this because we were having a conversation in one of our groups a couple of months back about this banking to fintech moves for seasoned bankers. And I'm going to borrow a quote that I heard from somebody in terms of what it takes to thrive in a fintech if you've been a banker. And so I'll borrow this quote from this person whom I know, who said that you learn like an intern, but you still advise like a sage. So if you do both at the same time, then the fintech switch is good for you. So that's the way I would see it.
Yeah, makes sense. And on the other side, what do you think? How the banks are actually planning their org structure? So again, talking about the year 2040, planning that far. What kind of leadership is currently required for any bank to stay a leader in 2035 or 2040? What kind of org structure is changing on the bank side?
So I would say, Nitin, that again, a lot can happen between now and 2040, but some of the things which hold good today will also hold good, I think, in 2040. So the basic tenets of leadership will still stay. You will have to be a good leader of people, and you need to know your domain. So there's a certain level of integrity that you need to maintain as a leader. So these are things that are absolutely non-negotiable, and those will still stay. And I see a lot of leaders, even today, who are very strong in terms of their business acumen, are great leaders of people, can rally people around them, inspire them to deliver. All those traits will still be required in 2040. One significant change that I see as a difference, I think leaders will have to need, and especially banking leaders will need to have the ability to understand technology a lot better than what they do today. And I see a lot of banking leaders whom I've worked with in the past, or even in the last many years, who say that they don't understand technology, and they say it sometimes with pride. I've heard people say, "Oh, I don't understand technology; it's for the CTO to sort it out." So I think that has to change, because technology is so integral to banking that when you're sitting in 2040, you can't, as a CEO, you can't say that I don't understand technology. You can't feign technology ignorance. And it is going to be sort of omnipotent and omnipresent if it's not already. So So one of the key things that a CEO needs to look at is the ability to harness the available technology, harness the power of technology to be able to leverage it for business benefit. And this can happen only if you understand technology. I mean, you don't need to know coding, but a conceptual understanding of technology is absolutely required when you look at this. So that's one key trait that I see that leaders will need to cultivate, Nitin. The other thing that I see also which leaders will need to look at is the ability to manage let's say a Gen Alpha workforce, because these are the kind of people who will be hitting the job markets in 2040. So it's very important to understand their aspirations, and create an organizational culture that will work for them, so that the Gen Alpha can make a career in banking, So that's something that leaders will need to cultivate. So I'd say, when I look at it, and this is, been my aspiration as well in terms of the way I want banks to function. Can you create an organization which has the compliance rigor of a conventional bank, but has the vibrancy and work culture of a fintech? Can we get the best of both worlds together? I think it's probably something that CEOs will have to look at in the future. Yeah.
Makes sense. And Vana, since you talked about that, the CEOs need to be more tech savvy. At the same time, you were talking earlier about that the CTOs need to keep an eye on what's new or what cutting edge in technology. I also want to touch base on one of the most recent subjects that's getting very popular. It's around stable coins. So stable coins, as we know, I think from perspective of India, there is no way currently to actually off ramp your crypto to fiat currency. That's not allowed by RBI. So in a way, India is kind of feeling some of the sectors of Indian population is feeling left out from what all is happening around the world in US or in Europe around stable coins. But how do you see this as an evolution? Are there any opportunities, and is India's cautious approach the right approach, and how banks should now be looking at stable coins as an opportunity?
Again, I wouldn't profess to be an expert on cryptos and stable coins, but from what little I've observed and read, I'll just share my 2 cents of wisdom on this, Nitin. Sure. I think one thing we've seen is there's been a significant growth globally in stable coins. So I'm hearing of global players like Visa, MasterCard, who are trying to use it for cross-border payments with instant settlements and so on. So and it can significantly mitigate the cross-border or simplify the cross-border payment mechanism and mitigate the volatility that's generally associated with cryptos. So obviously, that's a big benefit that we see. And I remember reading some time back that the stablecoin settlement could actually cut paperwork for MSMEs by up to about 70%. If we harness it right, then I think there is a massive opportunity that we're talking about. Almost like it could become, let's say, the UPI of global trade. That's the way I see it. So that is the opportunity that is there. It will, I think, in the next, let's say, decade or so, I'm expecting it to permeate into mainstream financial services. It will obviously take more time. And as you rightly put it, the regulators are taking a very guarded view on this. So my take is the regulators have to probably take a slightly more balanced view, because banning it will only mean an increased black market, and that which is not necessarily desirable. So I think regulators have to think about where do stable coins fit in the ecosystem, because many regulators are launching their own digital currency, like RBI's CBDC, which has been recently launched. So what stable coins will require is probably I'd say a well laid out set of guardrails, where there is an opportunity to make it coexist with the digital currencies and sort of still use stable coins to enhance cross-border trade. If that is done, then I think it could potentially be a game changer. So I'm at least from my understanding, the way I'm looking at it, I would say CBDCs for domestic use and stable coins for global trade, with almost like a UPI equivalent sort of rail on which both can coexist and payments can happen. That's sort of my view of the world, state of nirvana that we can get to.
Got it. Thanks, Vana, for sharing your views on these. So, Vana, that's all. I think we already crossed the time that we had booked for the podcast recording, but it was a great session. Just to summarize, I think what all I am taking away from the podcast. So we talked about customer segmentation at the bottom of the pyramid. How do we manage? How can banks actually manage their data in a better fashion? We also talked about how the leadership should evolve for the banks, for fintechs, and or on more on the personal side, how to better manage the banking related how to better balance between professional and your personal life if you are in banking, and generally between the large banks and the smaller segmented focused banks, how the technology architectures would actually have been evolving and would continue to evolve. And then we touched base on some of the futuristic elements that are now taking place. There is some activity happening on that. So a lot of takeaways for me, Vana, personally, and I hope anybody who would listen to this podcast, they would also get all the wisdom that you had shared with us today. So thank you so much, Vana, for taking out time and doing this with us. And like you said, we'll see, I think, if we can get more time from you for any of the future versions of the podcast, maybe part 2 of this, where we go deeper into some of the aspects.
I must say, first of all, I must thank you, Nitin, for having me here. It's been an absolute pleasure to be here because I think it's also given me time to reflect on some of these aspects. I don't think I have thought as much about some of these elements in the past as I've done in the last sort of few days leading up to this podcast based on the discussions that we had. So it's kind of helped me structure my own thoughts, and and I hope it's useful to those who are listening to it. And I've just been able to share my experiences and my opinions more than anything else. Like I said, I'm far from an expert or a guru, but after having worked 34 years, obviously there's some experiences that one can share, and I just hope it's beneficial to the audience as well. But thank you, Nitin, for having me over. It's been an absolute pleasure.
You're most welcome, Vana. Thank you.